Kevin, would you please share a little bit with us what is this gold-backed product?
Gold-back is a 24 karat gold invention that emerged on the market in 2019, and it was originally created to be an alternative local currency. So as we see the volatility around the world and BRICS nations wanting to exit from the dollar, the Federal Reserve and central bankers continually manipulating fiat currency. This company, Goldback, looked at that and said, this is unsustainable. It's like Warren Buffett was sharing today that when you look at receivables versus expenditures and you look at a 3% level, you worry about that if you're a company. The United States government has a 7% level, and it's completely unsustainable. It's a huge gap, and so they wanted to come out with a solution that would allow people to actually trade in physical gold. Obviously, when it's $3,500 an ounce, it's hard to go down and buy groceries. With even you get the smallest amount of gold, and even with silver, with silver going up with the devaluation of fiat currency, it's hard to use that for daily expenditures. And so the Goldback was designed to be able to use for daily expenditures. So it's fungible, it's denominated, and each denomination is directly proportional to the amount of gold that is in that Goldback.
And as a follow-up, Kevin, what sets the Goldback different from owning a piece of gold? A lot of investors from China, from the Middle East, even from India. Yesterday, I was at a talk when one of the investor from India was talking about people from India love to own a piece of gold because it's tangible. They love to own a piece of real estate. It's tangible. How's that different from the product that's offered by Goldback versus owning a real piece of gold? Even today, you can walk into Costco and you can find a friendly salesperson who's trying to sell you a 1 ounce of gold bar.
Yeah, I mean, I began investing in gold, buying gold coins, primarily like American Eagles, the standard kind of things, and maybe some buffaloes and so forth, in the 90s. And but as I saw the price of gold getting out of hand, a few years ago, I began searching for something that I could use, that I could buy at a smaller price, and then also that I could use for transactions. So again, what makes it different is that it's fungible. In other words, so first of all, it's denominated. So there are currently 8 denominations. There's a half, there's a 1, there's a 2, there's a 5, a 10, a 25, a 50, and a 100. So they're similar in that way to fiat currency like the Federal Reserve note. And they're varying in size depending on how much gold is in them. But the key difference that I saw was the incredible amount of anti-counterfeiting technology that is built into every one of them. I don't know how many of you know, but that's been a huge problem lately as the technology for making counterfeit gold coins and bars has advanced, and as the price has gone up and now it's worth it to invest that technology to make counterfeits, it's become a huge problem. So you go to buy a gold coin and you get it from a reputable dealer, and it's in the sealed case. Well, you can open that up, and a lot of people are finding if they take it to a coin dealer, which most people don't want to, right? You want to keep it in the sealed case, you want to keep it for a long-term investment, and you don't want to destroy the value by opening the case. But if you take it to a coin dealer, you may, in many cases, likely find that it's counterfeit. It's only got a thin layer of gold on it. So the Goldback has designed into it both visible and microscopic security features that can't be counterfeited. It's impossible. And they're also patented, and each one has a serial number. Again, things you don't find on any other gold product. So also just another thing is the artwork on these, it's phenomenal. It's like they're little pieces of tradable artwork. You really have to see them to appreciate the intricacy in the artwork. But so if you study them, just like the way you want to study to see if a Federal Reserve note that you get is real or not, you got to study the real one to identify the counterfeit. So if you study the Goldback, you see how intricate it is, and you take out a loop and you can look at the microscopic features in there that no one is able to counterfeit. You need, for example, it has a double helix. Well, you need the mathematical formula in order to generate that double helix. And then, of course, you need the really expensive machinery, and you need the patent and so forth in order to begin to generate that one helix. But there's many others in there too. So that's a big difference right there.
Yeah. Thank you, Kevin. The next question is for Dr. Putnam. Can you comment a little bit about the recent rise on gold?
Yes, I'd be happy to. Let me first do one clarification. I'm not the chief economist at the Chicago Mercantile Exchange. I retired last year. So Eric Norland, my very good friend and colleague, is the chief economist. So my views are my own, but happy to be here, even by Zoom. So gold has had a great rise. And, you know, a lot of it comes from the uncertainty that is in the world around us. And, you know, and more recently, we certainly have plenty of uncertainty around tariff policies from the US. And down the road next spring, we'll get a new chairman of the US Federal Reserve. And we don't know who that'll be, but, you know, it does call into question the independence of the Federal Reserve. So these things impact the US dollar negatively, and that means they impact gold positively. So gold has been a very big competitor to the dollar. It's been a place to hide in uncertainty. And so let me take just 1 second here to talk a little bit about how to manage and think about transitions, because we're really in a major transition. You know, from the 1950s through literally fairly recently, you know, we had a fairly peaceful world. There were low tariffs, not much protectionism. Global supply chains worked very well, except for a little period in the pandemic. And we really had a pretty calm world as these things go. That's changed, and there's no doubt that it's changed. If you listen to the new Prime Minister of Canada, Canada is very clear the old relationship with the US is done. There'll be a relationship, but it won't be the same as it was in the past. It's certainly true that the Europeans feel the same way, that the US is a different kind of partner now. And of course, that geopolitical risk impacts how you view currencies, how you view the dollar, and of course, how you view gold. So when you're going through really big change, one of the things that I advise people is to be very careful to analyze the short run and the long run very separately. The short run is charged with uncertainty, In the long run is, okay, you finally figured out what's going on, which, by the way, we haven't yet. But when we do, we've got to, we'll adapt and we'll figure it out and we will be resilient. I view this very much like the physicists do, what the physicists call something called phase transitions. You know what water as a liquid is, you know what a gas is, but when you go from a liquid to a gas, the transition is quite chaotic. Think about boiling water. The bubbles are all at the surface. That's where the chaos is. Well, guess what? We're in the middle of chaos, but this is real change. And the real change is the one that we have to figure out what's going to happen to the US dollar as the world's reserve currency. And to the extent that that erodes, that's certainly good for gold. So, you know, we'll see what happens, and I'll talk more about this as we go along. But gold has certainly benefited from the uncertainty coming out of the U.S. changing its views on tariffs and how it treats both its friends and its not so friends.
Thank you, Dr. Putnam. Do we have any questions from the audience? Anyone? It could be topics about crypto, gold, macroeconomics. If not, we'll come back to the audience for questions in the next round. So following up with you, Kevin. So aside, from the rise of the gold price in relative to the flat currencies, how fast do the gold backs appreciate compared to gold coins and gold bars that traditionally people would purchase and preserve and own?
That's a good question because I noticed this last year. So I began investing in gold backs in 2022, about the end of 2022. And I was just out, looking where I can buy them and get the best value, get the best price, and so forth. And just doing a Google search, I would notice that the prices varied quite widely. And just to give you a little bit more information here, so the gold backs are created. Right now, there are 6 state series. So like Florida has a gold-backed currency, and Nevada has one, and New Hampshire, and South Dakota, and Utah, and Wyoming. And then within those, they have the denominations, like I shared with you before. Well, they also have the minting date. So what I did was I was looking carefully and I was saying, well, why are these prices so different? Well, it turned out that a gold back that was minted in 2019 was obviously more valuable than one that was minted in 2020, and so forth. 2021 was not as valuable as one that was minted in 2020, and so forth. And so what I did was I collected all that data, and then I plotted the appreciation value in those against an American Gold Eagle 1 ounce. And it was quite startling. Just the appreciation, we're not talking about the rise in price versus fiat currency, just the collectible value, had increased about 40% versus the gold coin was like a couple percentage points. And I attributed that. I don't know why. This is just my take on it. That the difference is in what goes into it, and that is the artwork and the high security features that are built into it that you don't get in the American Gold Eagle that's just stamped out. So that was a unique thing that I discovered about gold backs that encouraged me to buy more. And so, so now I have goldbacks that not only that I try and circulate and go, you know, when I go out to a restaurant or something, I offer it in payment, but now I have a stock of goldbacks that no, I'm hanging on to these and letting them appreciate.
Thank you, Kevin. So I remember, you know, switching between gold and crypto. This question is more for Dr. Putnam. We had a audience ask a question about views on cryptocurrency to the previous panel. I'm also very interested to hear your take on crypto. It's approaching $100,000 US dollars again for Bitcoin, and there's speculation that it will hit $1 million sooner than most of us would expect. What is your opinion on that, Dr. Putnam?
It'll definitely hit $1 million before I expect it to. But at any rate, Bitcoin has had a very interesting history. You know, it was only invented a little more than, say, 15 years ago, so give or take. It was accompanied by new technology related to the blockchain. It was designed to be both secure and anonymous. The security didn't turn out that well for a while, but it's getting much, much better. But something very interesting happened to Bitcoin is how it trades. You know, from its infancy all the way through 2019, Bitcoin just was in a world of its own. It tended to rally when you thought it might become more institutionalized. My old company, CME Group, launched Bitcoin futures in December of 2017, and that was accompanied by a rally in Bitcoin because it represented a step toward institutionalization. That rally didn't hold. But in 2020, something very different happened. We had the pandemic, and there was a lot of work from home, and certainly in the United States, there was a lot of fiscal and monetary stimulus, so people had some money to spend, and they started trading stocks, or as Warren Buffett might say, stock symbols, pretty aggressively, but they also started trading Bitcoin, and very aggressively. And since 2020, Bitcoin has not danced to its own drummer nearly as much. It's like a high beta equity market. By that, I mean, it's still very volatile, but when equities are up, it's up more. And when equities are down, it can be down more. So Bitcoin has really changed stripes from being dancing to its own drummer to now being a little more of a risk on, risk off asset like equities. But I do think there's a change coming in the next 5 to 10 years. And that's what I was talking about earlier. I am very concerned. Concerned's probably not the right word, but I'm certainly watching the status of the Federal Reserve and how independent it is, and trying to assess if the US dollar remains the world's reserve currency or whether that slowly erodes more and more. And that would be to gold, not just to Bitcoin, and also to euro and Japanese yen and the Chinese yuan. But if those things occur, you know, Bitcoin becomes a player. So there's certainly some change going on that we don't know where it's going to end up. But Bitcoin clearly has a role. It's not backed by anything, and that's what makes many of us, myself included, nervous. On the other hand, it's a currency that is much, much harder to manipulate. Maybe I shouldn't have called it a currency. It's a security to some people. But at any rate, it's a financial exposure that has a lot of attractive characteristics if you're trying to diversify your portfolio and you want to be outside of the United States during these times of global uncertainty. So, you know, I can see why Bitcoin has done very well. I do think over the next 5 years, it will lose a little bit of the attachment to equities, but it might pick up some of the diversification from the US dollar. So there's a future there, but I'm definitely not going for your $1 million.
So as a follow-up, when you mentioned CME launched a Bitcoin future back in 2017, there are also a few other financial institutions like JP Morgan launched a Bitcoin related mutual fund product. Do you consider that as an endorsement, institutional endorsement for Bitcoin and cryptocurrency?
No, I don't. And it's an interesting view, but Goldman Sachs and certainly CME Group and many other companies in the financial industry are there to provide the services their clients want. And it was very, very clear that clients wanted to trade Bitcoin and other cryptocurrencies. Um, my old company, CME Group, has no position. They don't buy, they don't sell. They just run the trading platform for for Bitcoin futures, Ether futures, Sol futures, as well as options on these things. So they provide the platform. And if people trade, they make money. And if people don't trade, they don't make money. And I think that's really what a number of financial institutions, some of the leaders on Wall Street were very negative about Bitcoin eventually. But when their clients told them, hey, this is something I want to invest in, this is something I might want to trade, slowly but surely, and slowly was the operative word here, many of these Wall Street firms came around. The Securities and Exchange Commission, however, was very, very slow to approve exchange traded funds and other things related to cryptocurrencies. That has also changed. So we're going to see, a more friendly regulatory environment, but I don't think that makes any difference for the price because now it's really a matter of, as Warren Buffett would say, doing your homework. And, we know that he doesn't particularly like it. So, but I do think, Bitcoin is much more institutionalized than it used to be, but the institutions are supporting the platforms. They're not endorsing Bitcoin as an investment.
Thank you, Dr. Putnam. And we all know there are countries around the world. For example, El Salvador would take Bitcoin into their day-to-day transactions to allow their citizens to purchase regular household items using Bitcoin. And this next question goes back to Kevin. You also mentioned the goldbacks are meant to be circulated and used for daily transactions. So where can you actually spend all these goldbacks that you own?
Goldbacks can be spent largely at small neighborhood restaurants and shops. I've spent them there. I regularly offer them in trade instead of the Federal Reserve note, and surprisingly, they're taken more than I thought that they would be. I've never tried them at a Costco or Walmart or something like that. I don't expect that they would ever do that. But on the Goldback website, there are a list of thousands of companies, and it's growing almost exponentially around the world that are taking Goldbacks. It's not a little phenomenon. It's taken the world by storm. People are seeing that they can't rely upon the fiat currencies, and the small business manager who maybe saw the devastation that the pandemic did to his business, and saw what it did to his fellow businesses, is looking for a way to be able to control his own destiny and not be tied to a fiat currency that's heavily manipulated. So I'm seeing a lot of that in the people just as I offered it around town. The small businesses are taking them.
So does the small business have to be registered with the company in order to take these goldbacks?
Oh, no, not at all. Not at all. And another question that usually follows that, like I said, there are 6 states that have passed legislation that makes gold and silver kind of returns it to being to almost a currency status. And more and more states are jumping on that bandwagon and have legislation being passed through, going through the legislation process. It takes a while naturally to go through that process, but to pass the legislation to make gold and silver something that people can spend without being taxed. Not like a, like when you buy and sell, like it's taxed like a product. So people ask, well, okay, so if I don't live in one of those 6 states, can I spend these? And the answer is yes. I live in California, and California is not one of those 6 states. And I spend them all the time. It's because people want them. So you're just offering them in trade, as if you would offer the restaurant owner a gold coin. You have a huge banquet, a big wedding or something like that, and here's a gold coin for this wedding service you provided. That's what it's like. There's no law against trading gold and silver. Just the advantage to trading gold and silver, trading goldbacks in the states that have passed the legislation, is that it's been labeled as specie legal tender, which I won't go into the long explanation on that, but it's kind of returning it to the constitutional value that it has. Our Constitution in America still says that the only thing to be used as currency is gold and silver coin. So states are recognizing that and they're returning it to that status. But you can spend it anywhere right now.
So in your role as a distributor for goldbacks, do you see the acceptability of the goldbacks are going up when the dollar is strong or when this dollar is weak?
It's I don't see a correlation. I don't show the correlation with that. I see the correlation with, as he was sharing, with volatility, with the actions of the central banks, with uncertainty. You never know, when the next pandemic is going to hit or another war or whatever. I'm seeing a lot of correlation in that arena. Yeah.
Thank you, Kevin. And for Dr. Putnam online, there has been obviously a lot of
That woman has a question over there.
Oh, there's a question? Okay, so we have a question from the audience.
Apple Pay and Alipay. So I wonder on the future 5 or 10 year can be a lot of the world like a payment just for like crypto. People can more useful for life.
So the question is, are we going to use these payment systems?
Yeah, a new payment.
A new payment
like the
system
world payment for crypto.
that will be attached to Bitcoin or crypto, that would allow average consumers, people to make their daily purchase needs.
Yes.
Dr. Putnam, I defer you to that question to start.
Okay. It's very interesting to watch how different cultures and countries deal with digital payment systems versus, the cash. I think the country that uses the most cash around the world is Japan. And it's also interesting to see what cash is used for. Something like 40%, give or take, of the US dollars that have been printed up as cash are not in the United States. And most of them are $100 bills. You can figure out what they're used for, but it's not for daily transactions in the local bazaar, I can tell you that. So I think we're really aiming and getting there faster and faster into a totally digital world. And it will be very fascinating to see how central banks respond to this. I think central banks are very, very nervous about cryptocurrencies because they don't control them and they don't really, understand them. Central banks typically hold gold, so they already own gold themselves. But I don't know how much they want other people to trade gold. Back in the Depression in the United States, we actually banned gold for a while. That didn't work out very well politically, but so I do think there's a movement for central banks to create their own digital currencies. Um, there's one already. There's a couple out there already, but if you ever go to the Bahamas, you can trade what they call the sand dollar, which is their digital currency that's linked to their own Bahama dollar. Um, by the way, that was the engineering behind that and everything that made that possible was a company called Movement, which is in Vancouver. And they're on the forefront of creating these central bank digital currencies. So we've got to, it's just going to be fascinating over the next 5 years. You've got gold, which has been around for 3,000 or 4,000 years, and it really belongs in everybody's portfolio. And then you've got the newcomer, the cryptocurrencies, and you've got all these old cash and the United States dollar and everybody else's currency, and yet we're going to go digital. So I think you'll be able to pay digital for everything, but it's we're not quite there completely yet on some of these new things.
Yeah, I just wanted to tag off of that, the central bank digital currencies. How many people are familiar with that? Not too many. A lot of you, I think, are from China. And China has the social credit scoring system where they can turn off your money if you're not behaving as they want you to. Well, central bank digital currencies are kind of the next evolution of that. So they're programmable currencies that the central banks, like the Federal Reserve, will issue. And it's going to be a mandatory issue. So it's going to replace the paper and the Federal Reserve note with the central bank digital currency. The World Bank, the Bank of International Settlements, they're rolling it out. And so it's not hard to find a map when you do a search and to see how many countries are rolling out these central bank digital currencies. It allows the country, the government to control the people. And I'm against that. And so I think there's a movement to address the young lady's question about digitizing gold. So there have been cryptocurrencies now that have rolled out that are based upon gold. And so unlike the Federal Reserve note that is based upon nothing, that's really your circulating debt, these cryptocurrencies, they're saying, okay, we have a store of gold and your crypto is tied to that directly. That's a step up. That allows you to do those transactions that you want to do from your Apple Pay and all that. But still it's digital. It's vapor, and I want to have plenty of tangible on hand when the next thing rolls around.
Well, Frank Sinatra always had a dime in his shoe, because you never know when you got to make a phone call.
Yeah, right.
So like both gold and cryptocurrencies cannot be 100% controlled by one single government on this planet. And do you think this will provide even more uncertainties for the global financial market in the future? Because countries have to agree on the value, intrinsic value of these items, so they can measure the value of the goods and the things, the services that the consumers can use. But the world we see today, there are a lot of disagreements compared to 5 to 10 years ago.
Yeah, the countries are definitely not going to agree with each other. But the market is going to rule. what people want to do and how they want to spend and how they want to invest, is going to be the determinant. And for me, that's really changing. If you looked at that period of very recently when the U.S. stock markets declined, you actually had the interest rate on the yield on U.S. Treasuries rise. That meant the price was falling. The U.S. dollar got weaker. Things are changing, and that opens up very, very new avenues. Well, not new avenues, but certainly, gold benefited. Cryptocurrencies provide an alternative. It's going to be a very, very different world. I wonder if I could take 1 second, though, to well, maybe more than 1 second, but just a little bit of time to tell you a little bit about a book I just wrote. Actually, Don Stabile was my co-author. He wrote most of it. But we did a book on the apprenticeship of Warren Buffett because we happened to be very good friends with the family that was Warren Buffett's first non-family investor. So we're back in the 1950s. And it's a really interesting story because this family, the Dodge family, Homer Dodge, he lived in Vermont, and he invested with Ben Graham, who was the best investor in the world in the 30s and 40s, and he hired Warren Buffett to work for him in the 50s as a young man. And when Ben Graham retired, Homer Dodge said, "Well, who's going to manage my money?" And he said, "Well, you should come see Warren." And so he drove from Vermont all the way to Omaha. Of course, he was actually going, it was on a bigger trip. And he met Warren Buffett, and there was faith in each other from the start. So if you're interested, my short advertisement is there's a book on Amazon. It's called The Apprenticeship of Warren Buffett, and it's a personal story. It's not about Warren Buffett's philosophy investing, although that shows up a couple of times. It's really about how he met his first investors and how he got started, all before Berkshire Hathaway. And he was investing in a time that the world was really changing. It was coming out of World War II. It was going to be a different world. And, Warren Buffett really figured that out pretty quickly. I think the world's really changing now. And, gold, cryptocurrencies, the dollar, all those relationships are going to look very different in 5 years. Anyway, apologies for the ad, but it's an interesting story.
Thank you. So today we all came here for one common reason, for Berkshire Hathaway, for Warren Buffett. I just wanted to end with a personal question for both of you. What are your biggest takeaway from the meeting today, and what is your outlook for the U.S. stock market in the next 6 to 12 months? Kevin, I'll start with you.
Okay. My takeaway was that he sees, particularly the thing that that I grabbed onto was when someone asked him about, okay, what do you think about Doge, and what's happening in cutting the waste in our government. He said that it was going to be he wouldn't welcome that job. And that it's going to be quite a job to see what can be done there. That the government's getting to this pattern, this self-generating pattern where debt upon debt and spend upon spend, and getting control of that beast is a challenge. So I take from that. Even with the tariffs, and if Doge continues, even if Elon going back to operating his companies, even if his people stay on and they continue searching for waste and fraud and abuse, that they do get, let's say that they can get even 5% of that out of our government, that would help. But I still see that the Federal Reserve note has been so devalued, debt upon debt, that it's unsustainable, and so inflation is going to continue, unfortunately. back in 2023, I told people, yeah, it doesn't matter who gets in office. In my opinion, this is just what I saw. That it doesn't matter who gets in office in 2024. We're still going to have inflation well through 2025, and you should be investing in gold. And I practice what I preach. So we see that. I still believe that it's going through 2025 and possibly into 2026, no matter how much waste is cut and so forth, because during the pandemic, everybody was told to stay home, and nothing, effectively, comparatively speaking, nothing was produced. People weren't going to factories, people weren't going to their shops, things weren't being built. And so we had money that was just being printed and thrown into the economy with no products or services, relatively speaking, to support that. And that's what creates inflation. So we can expect that inflation to last, even if like our government suddenly got responsible and said, no, we're not going to waste anymore. No, and the Federal Reserve said, no, we're not going to print money anymore. We still have the residual effects of all the money that was thrown into the market during the pandemic.
Kevin, thank you. Dr. Putnam?
I have a little bit of a different view, but it applies to both the pandemic and the inflation that occurred, as well as the tariff war we have with us now. Whenever I got in trouble, my uncle used to tell me, if you want to get out of a hole, stop digging, which is that's an old phrase from Will Rogers. And, you know, when we had the pandemic in the United States and around the world, the United States spent $5 trillion of basically giving taxpayer money back to the taxpayers, which they then spent. And the Federal Reserve bought $5 trillion of government debt to make sure there was no interest rate effect. And, you know, and we had some huge supply chain disruptions because of the pandemic. But you know what? We stopped. Interest rates eventually went up. The Fed stopped buying. The government stopped spending on giving people their money back. And the supply chains normalized, and the inflation came down. But it didn't come all the way down. And I think that if you look at the period from 1994 to 2019, before the pandemic, the average US inflation rate was about 2%. And it got a little bit above 3 and maybe down to 1 when the economy was weak, but it was a very narrow range. And man, you had the stock price enthusiasm of the dot-com bubble in the 90s, and you had a subprime crisis in the 2007 and 8, and you had all these different things, and the inflation rate really didn't matter. And in Europe, the same thing was going on, but it was more around 1%. In Japan, it was around 0. But I do think in this new world where we are much more populistic, we're much more nationalistic, we're much more protectionist, that the inflation rate is going to be higher than that 20-year period. I don't believe we're going to have any kind of new episode of severe inflation yet. But, you know, I used to forecast inflation would be 2% every year, and I was never wrong by very much. Now I'm going to forecast 3%, and we'll see how that works. But, you know, in that environment, your money is getting eaten away a little bit, and you're more uncertain about what's going on in the world. What does that mean for equities? Well, equities have absorbed the initial shock of the tariff war. And as the United States has backed off of quite a bit from its initial gambit, so to speak, we've had the stock market rally back a little ways. But I really see the next 12 months as very much trying to figure out what's going on. I think it's going to be highly volatile, but I don't think we're really going anywhere. That is, I don't see big changes. You know, if I go to sleep for a year, that's probably a better investing strategy than to try to day trade this thing because it's just too uncertain. I think Warren Buffett would probably buy into that one. So we'll see how it goes. But I really feel like, you know, at the end of the day, economies are very resilient. So once they understand what the changes are, then we can start growing again. But right now we don't know, so we're still in the volatility stage. So I'm, you know, U.S. equities are flat for the next 6 or 7 months, but highly volatile.
Thank you. Before we let our panelists go, it's 6:16. We're going to take a break till 6:30 for dinner, but I would like to give the audience one more chance. Do you have any questions for Dr. Putnam and Kevin?
Oh, yeah. Can I ask a question about like a gold investment? As you know, like Warren Buffett previously said that gold is not productive, so it's not driving any dividends or income. So he prefers like a business that innovates and grow. So like given this kind of things, you know, I want to learn like as a long-term investor, how do we reconcile this kind of gold as a historical store of value? Like versus like this kind of where Buffett's opinion, like perspective, seeing that like this kind of growing business or like more superior investment. So I'm just wondering, like in the modern investment, like what is the role of the gold investment, like other than like crisis hedging those one? So I want to get your opinion on that. Thank you.
Well, in keeping with that, yeah, I would say invest in companies that are producing precious metals, innovating in precious metal products. I'm not a big fan of precious metal stocks, you know, because again, it's a digit, it's just a thing on a screen. So yeah, I think that's a great thing. Find a company that is innovating in either a way to spend the precious metal or actually innovating a new type of thing that solves a need that's made out of a precious metal.
Any comments, Dr. Putnam?
Yeah, you know, I mean, Warren Buffett's philosophy, and I quite share it, is that, you know, you're investing for the long run and you're investing for growth. So you've got to find high quality companies and so forth. But you know, we're all also own a portfolio. And in that portfolio, I have no problem with putting a little gold into it because I am very uncertain about the future. So my equity investments follow the Buffett strategy, but my portfolio advice is to have a little bit of a diversification into things that handle uncertainty well. And that would be gold.
Thank you. I see we have hand over there. We have time for one more question.
I am so sorry to be the final question. You know, a lot of times folks talk about U.S. dollar gold, renminbi gold, and the U.S. dollar pair, U.S. dollar renminbi, and then what is the impact of gold? But you know, when you look at reserve currency, one has to look at the euro, realize that oil comes into play. Look at the snafu from this week, from this recent week in Portugal and Spain, and think, is it possible that the euro could actually benefit gold in a way that hasn't really been talked about very much, given what we're seeing in Europe as relates to recent events, or anything related to Europe gold? I guess I'm thinking this way because Europe has so much less resistance to gold investment, crypto investment. So I think it just might be interesting to get your comments while we have you. Thanks.
Well, the euro has done very well in the last, this year, certainly. And the Europeans are going to be able to buy Chinese goods much cheaper than they were 3 or 4 months ago because of what's happened. And in the Middle East, most of the countries, well, many of the countries in the Middle East tie their currencies to the U.S. dollar, so they've actually depreciated. And that's not something that, well, maybe they wanted, maybe they didn't, but they got it because they tied to the dollar. So yeah, I think we're going to see a lot of interest in the euro. It's certainly the major competitor to the dollar in terms of a currency liquidity. And they're going to be beneficiaries, I believe, of the trade war between the U.S. and China. You know, back in 2018, when President Trump put the first set of tariffs on China, China responded by not buying U.S. soybeans, and the U.S. lost, and China lost, and Brazil was the big winner. This time, Europe might be the winner. It won't be the two countries that are fighting each other. It'll be a third party that turns out to make the most of it. So you're quite right to focus on the euro.
I'll leave it to him and the expert on that. I just want to provide just a little side note on that, and that is that it was a couple of months ago, 2 or 3 months ago. I don't know if how many of you saw the news, but the banks were flying large airplanes full of gold to the United States. That coincidentally was happening around the time when they were talking about auditing the Fort Knox. So I think if they really do, I don't think they're really going to audit Fort Knox, but I think if that became more of a, people perceive that as a reality, I think a lot more gold would be flying into the United States temporarily. And of course, that would create a shortage in the countries where it's coming from, Europe and the UK and so forth. But on the long term, I would go with what he said.
Thank you. Let's join me to thank our panelists for their very good insights about some alternative investments that we can do in this current volatile time. Thank you very much.
Thank you.
Okay, so now we will take a break. Dinner will be ready outside at 6:30, and coming back 7:10, we will do a last fireside chat. The topic will be on artificial intelligence.
Yeah, that's interesting. Good moderation.
Thank you. That was a very interesting topic about gold. Never heard about. There's so many different types of gold. So dinner's ready. Please go outside and. Oh, sorry, we're gonna go by table numbers. I apologize. So the first row, let's go first, and we'll follow by the second row of table.